Welcome to this exciting talking point where we'll deep dive into the world of trusts and taxes. As you may well aware, trusts are a powerful financial tool that allows individuals to protect and manage their assets while minimizing tax liability as much as possible. And in some cases, even allowing you to reduce your liability to zero. However, navigating the intricacies of trust and taxes can be quite a daunting thing. And that's where our expert guest comes in. Now, in this short chat, we'll explore the ins and outs of trusts and how they work and the tax implications associated with them. So sit back, relax, and get ready to learn from one of the foremost experts in the field of trust and taxes. So let's get started. Now, joining me today is Robin Sirkhoth, one of Destinata Accounting's trust accounting specialists. So Robin, thank you so much for taking the time to join us today.
Hi, Damien.
Robin, we've obviously covered this topic a number of times in our talking points, but in order for someone to benefit from reduced tax liabilities and trust, we use a specific SARS principle. Now, as always, we have to make it clear that this is not something that just any accountant can do because it requires specific training and skills development to ensure that it's done correctly and to make sure that the client is not being exposed. So to kick off, can you just give us a brief explanation about what the conduit principle is for those who might not know?
The conduit principle, it's a principle where trust profits are distributed to beneficiaries and therefore taxed in the beneficiary's personal capacity. So the tax liability itself will then move from the trust to the beneficiary.
And then these distributions, who can actually receive those from a trust?
So it can be any beneficiary of the trust. We go according to the trust deed. The beneficiaries will be listed there. But if you have children who are not earning any taxable income, the conduit principle would be beneficial in that case.
And then let's just talk amounts here. How much can actually be distributed to the beneficiaries using this specific principle?
So the thresholds are amended every single year. But for the 2024 financial year, it is as follows. So those under the age of 65 can receive 95,750. If you are between the ages of 65 and 74, you can receive 148,217 rand. And if you are 75 years old and above, then you can receive 165 rand, 689 rand.
Now, Robin, those are some impressive numbers, but what do these thresholds actually mean for a taxpayer?
So what it means is if you have no other taxable income, basically if you receive no income whatsoever, and you receive a taxable distribution from a trust which is below the threshold, then that distribution is completely tax-free. So no tax will be paid on that distribution if you have no other income.
Now, speaking of income, let's say I've got a beneficiary that is earning an income. What will happen in that case if I'm distributing someone who already has a certain income?
So we can still distribute to that person. However, it will be beneficial to request a consultation with your accountant to see what the best possible tax saving will be for you in that case.
Fantastic. And then I think the last question is just technicalities. So, what documentation would you require from the beneficiaries to be able to do these distributions?
So most importantly, we will need an income tax number, but please note that we as Destinata Accounting, we can register the beneficiary for income tax. And then also note that it is the responsibility of the beneficiary to declare this distribution in their personal income tax submission. We can assist with the personal income tax submissions as well, but the beneficiary needs to be registered for income tax.
Fantastic. Thank you so much, Robin. And you guys at home, thanks for joining us in this insightful video about trusts and taxes. So I hope you found it informative and helpful in understanding the complex world of trusts. Obviously, you cannot walk this road alone, so we've got the experts with us. And on that note, if you enjoyed this video, please give it a thumbs up and don't forget to subscribe to our channel, and you'll get a lot more informative content. And I also just want to remind you about our upcoming free training for anyone who is a business owner. In this training, we will give you all of the tips and tricks to learn how you can get valuable strategies to reduce your tax liabilities. Now, that's often one of the biggest issues with business owner is how do we pay less tax legally? We've got the solution and we've got the answer. So make sure you look at the description below. There's a link there for you to register. Register, watch that training, and I promise you it'll be one of the best things you've done. It's a very short video, only about 35 minutes. So make sure you register, and any free time you've got, have a look at that, share that with any business owners that you are friends and family with. And that's it. Once again, thank you for watching, and I look forward to seeing you in next week's video. Until then, bye-bye.